Anytime you're talking about a prediction about the future, that's why we all have risk factors that say often inherently unknowable. Our statements have to be based on reality, because if not, the executives of this company go to prison. It's not a guessing game. We have to believe in what we're saying when we're signing off on our financial statements.
Right. Hello and welcome to the Elements of Deep Sea Mining podcast. A bit of housekeeping before today's interview. The Elements Pod will be at the Seabed Minerals Conference in Bergen, Norway on the 24th to 26th of March this year. That's coming up. The organizers have kindly arranged an on-site studio, and so I'll be recording interviews throughout the event. If you're attending and would like to join me for a conversation on the podcast, get in touch with me at eric@elementspod.com. And in any case, please come by and say hello. If you are considering attending and want to check out the program, their website is seabedminerals.net. Now on to today's episode. My guest is Craig Shesky of the Metals Company. One note before we begin. This interview was recorded a month ago on the 2nd of February. As always, developments in the space move quickly, so keep the timing in mind as you listen. Also, apologies for the bad audio on my part for the beginning of this episode. Luckily, Craig's audio is not affected and the audio improves after about the 8-minute mark. Without further ado, here's my conversation with Craig Shesky. Welcome to the Elements of Deep Sea Mining podcast. I'm Eric Young. Joining me today is Craig Shesky, Chief Financial Officer of the Metals Company. Craig, thanks a lot for making time today.
No, it's my pleasure. I've been a fan of this podcast, and I've listened to a lot of the past episodes, so very eager to get into it with you, Eric.
That's really nice to hear. So I think this is going to be a little bit different from the normal Craig Shesky interview, where I think you're explaining deep sea mining to people who have a finance understanding. Today, I hope we're going to be explaining some of the finance aspects to people with a deep sea mining understanding. So let's just kick off with you. Where do you come from? How did you get into the deep sea mining industry?
Yeah, I come from a small town in northern Michigan, Marquette. It's on the south shore of Lake Superior. I've been in and around mining to some degree for all of my life. My dad worked in the iron mines for Cleveland-Cliffs, the Empire and the Tilden iron mines. And my brother worked in the mines. I worked in the mines actually during college to pay my way through college. And I drove some of those big production trucks that you may have seen, the giant Tonkas that are about the size of a house. So that was very fun. But I wanted to come to New York, and I did in 2006. I worked in investment banking for Morgan Stanley for a couple of years. And then I was at an investment firm, a hedge fund called King Street Capital Management for 12 years after that. So while I was at King Street, I started covering metals and mining. I started making recommendations in both equity and credit investments in some large diversified land-based mining companies, as I've had some background in the space. And I find it to be a fascinating area that, frankly, not a lot of people think much about, or certainly are starting to think more about. If you read in the headlines, a lot of it's focused on metal supply and demand, and silver prices ripping, copper prices ripping much higher. And I think, I often look back to what brought me to the metals company, and it wasn't a direct path to come into this space. But when I was making recommendations in various commodities, I really was interested in nickel and copper in particular. Both are metals with some supply issues on land. Grades of nickel and copper have gone down over time, and therefore you have to move a lot more material to get the equivalent amount of metal. And this really opened up, the possibility for what TMC is doing, and it's called deep sea mining. I think our type of deep sea mining is probably the least impactful of the three major types. It's the collection of polymetallic nodules, which sit unattached on top of the seafloor. But before I get too far into that, our CEO, Gerard Barron, came into our offices at the fund I worked at. He told me about the company prior to it being public, and they were looking to raise some capital. So I was open-minded to it. I didn't know much about deep sea mining. This was back in 2019. And I did a bunch of research on the technology to collect the nodules, on the regulatory environment, which I'm sure we'll talk a lot about today, and then on some of the resource economics. And what became clear to me was a lot of my previous assumptions about how expensive this must be to, go to the bottom of the ocean and pick up these rocks, was incorrect initially. And I did enough work on the company that I invested in it in 2020. And then I joined the company full time in 2021. So yeah, I wouldn't say it was a straight path to be here. I've never been a chief financial officer of a company before, but I've been, in and around finance and in and around mine finance for a large portion of my career. So
Can,
yeah, that's what brought me here.
can I ask, um, to what extent, like, does having on the ground experience, having worked at a mine, driven a mining truck, is that useful in the financial side back when you were making decisions about investment in mining companies? I think it's interesting the link between kind of blue collar experience and white collar decision making.
Yeah, no, that's a good point. And I guess it's useful in the fact that I can somewhat speak the language. I'm not a geologist. I'm not an engineer. I have a finance background, but at least knowing the process of, where you're going from the ground into the crusher, into the concentrator, all the steps to turn, large piles of rock into relatively small piles of metal. That I think was helpful. But look, we at, the metals company have a pretty diverse group of people working here. And there are a lot of geologists, there are a lot of engineers, there are a lot of PhDs. There are a lot of people who work here on the environmental side with their PhD. For me, I feel undereducated compared to many of the people here at this company. But yeah, having that blue collar background at least, I guess, gives an appreciation to how difficult it can be to get a lot of this metal. And of course, that was iron ore where I was working for Cleveland-Cliffs many years ago. But the same principles apply, for open pit land-based mining. It's a hard industry. It's an industry that has, I think, a mixed reputation, both economically as well as environmentally. And there have been a lot of steps, of course, to improve things. But one thing that is pretty clear, the pace of improvements isn't equally distributed around the globe. There are, some mining practices in other parts of the world that are very antiquated by Western standards. So it's easy to take a one size fits all approach in talking about the space, but I think, this is why having a format like this is good. To have a long form interview, we can get into a lot of nuance that isn't always appreciated in a 500-word article.
Then let's jump to what's your role at PMC? What does a chief financial officer actually do day to day? What are your responsibilities?
Yeah, look, as a public company, we have to comply with SEC reporting standards. We are audited by Ernst & Young. I have to sign off on all of our financial filings, whether that's quarterly, annual, registration statements to issue securities. Basically, the job of the chief financial officer is to raise money when needed and preserve the capital that we have raised and make sure that we have sufficient resources to execute on our plans. It's also to be in charge of, again, all aspects of financial reporting, tax, treasury. But at a company like TMC, we're pretty small when it comes to headcount. We're about 50 people at the company. And then, of course, there are many hundreds of people at our partners, such as Allseas, who are working on the project at any time. But that means we wear a lot of hats. So when it comes to communications, media outreach, speaking at conferences, drafting press releases, creating Excel tables for various analyses that we're doing, it's really every day is quite different. And even, on the government side too, we all have to pitch in when it comes to, putting together the applications that we make, whether it's to the International Seabed Authority or in the US case under NOAA, the National Oceanic and Atmospheric Administration. So we all have to pitch in on everything. So no day is the same. And I found it to be a pretty invigorating enterprise. It hasn't been easy being a public company. We've had a roller coaster ride when it comes to the stock, a roller coaster ride in terms of the regulatory paths that we've taken. And, I think we're in a very good, healthy position, but it's basically my job to keep us in a healthy position and ensure that we can execute and, do what we've told investors we intend to do.
Yeah. I imagine it's probably actually quite exciting to have all those different roles. Kind of like, I think you'll have to kind of be the sort of person that thrives a little bit on the excitement and on the challenge. And I was going to ask this later, but tell me what it's like to be in the kind of controversial space that deep sea mining is in, or has certainly been in for the last few years.
Yeah, you're right. It's been a controversial industry since I first looked into it, but it's only gotten more controversial, I think, in terms of the writing about it and the media perception. In fact, going back to 2019, one of the things I think that really kicked it off in terms of the controversy was the 60 Minutes piece. Our CEO spoke on it, but some of the opposition groups spoke in that piece as well. And that really, I think, raised the profile of the industry because at the time, the intention of the regulator, the International Seabed Authority, was to deliver on their target of regulations to allow this industry to move forward in 2020. So in anticipation of that, there was a lot of focus on what those regulations would look like, who would be the first ones moving forward. But since that time, there has been delay after delay after delay, and I think that's opened up an opportunity for some of the opposition groups to get organized and to come up with a campaign against deep sea mining in general. But again, I would say nodule collection should be thought of in and of itself. It's kind of difficult to paint this industry with a broad brush, just like you wouldn't do that with land-based mining. You wouldn't say all mining is bad or all mining is good. There are certain projects on land that are palatable. There are certain projects that manage their waste and tailings quite effectively. There are other projects that aren't as environmentally sensitive. So you have to dig in a little bit and get the nuance and, treat each project by its own merits. So to answer your question directly, yes, one does have to thrive on, being able to sometimes prove people wrong. And maybe that doesn't sound like the greatest trait to have, but I certainly, from a personal perspective, I find it to be a challenge when we meet, whether it's investors or media or people who might be skeptical of this industry. It's invigorating to then say, okay, well, here's my chance to lay out the argument. And if you agree with me, that's great. And if not, that's fine too. I think that's the cornerstone of a healthy society. Let's put up all the facts and let the chips fall where they may. So I do get a spring in my step when it comes to talking to people who perhaps may not be familiar with it, or even better, have a view that maybe through facts I might be able to sway them. I think that's a very healthy place to be for any industry, especially a new industry like this one.
I don't follow everything that you participate in terms of the online commentary controversy, but it does seem to me like you try to take a fairly kind of not the most adversarial tone, and I really appreciate that. It's one of the reasons why I'm looking forward to talking to you on this topic. I see a lot of people, I don't know, getting either really aggressive or really defensive in some of the discussions that happen in places like LinkedIn. I think it's easy to get that way with people. I mean, when people get aggressive, it's easy to get defensive. I'm sure that you get tired of having the same kind of discussions repeatedly. But yeah, I appreciate the tone that you conduct yourself in to the extent that I've seen it.
Well, I thank you. Thanks for saying that. And yeah, it's not always easy, but it's the nice thing about this is, this isn't a debate that's just happening in a vacuum. Like, we'll have a good sense of who is correct on it, whether it's, economically, whether it's environmentally. I know there is a view often on the environmental side that this is out of sight, out of mind, that it's far offshore and it's not going to be something that one can even observe. If what TMC says is, look, this is a very benign form of metal extraction. Like any extractive industry, of course, there's an impact. But what we would say is you're going to need the metal to come from somewhere. There can be reasonable debates on how much metal we will need, the trade-offs between land-based mining and seafloor nodule collection, but I don't think it serves many just to say it has to be, black and white. I think you're going to need a lot of solutions, including more land-based supply, including increased recycling rates. But I often don't understand if what we are saying isn't correct, and we think that the impacts are going to be, bigger than what TMC claims, we're not ramping up to, a dozen ships operating at the same time. We're starting with one ship. So we learned so much during our trial in late 2022, where we collected 3,000 tons of nodules and lifted them to the surface. And we had about 50 assets in the water observing what was going on. And that helped us understand the plume dynamics, the dust that gets kicked up when you collect these nodules. And, all of the data that benthic seafloor plume, the data suggests it's quite manageable. It stays generally in the mine site or within a couple of kilometers of the mine site, which is running contrary to, I think, some of the narrative against this industry. But we'll know even more when we begin at that relatively measured ramp up. So I think these problems for metal supply and some of the areas where we're currently getting a lot of our supply, such as nickel, about 2/3 of that's coming from the Indonesian rainforest, one of the most biodiverse areas on the planet. So I think we owe it to ourselves as a society to at least, attempt to do things a bit better. And in our view, that's strongly what nodule collection would be. It's a better way to get these metals, but it's not either or. We're going to need a lot of these solutions. Even on the economic side, there is a frothy debate about, is deep sea mining cheaper? Is it more expensive? The proof will be in the pudding. Like, we anticipate we're able to operate in the first quartile of the cost curve. So, because you have 4 metals in this one resource, nickel, copper, cobalt, and manganese, that means on any one of those metal bases, our costs would be lower because you're getting really the other 3 metals for free. But we don't have to wait very long to tell. If we are correct, the economics will be evident. As we are an SEC regulated, NASDAQ listed company, there's not really any place to hide. So the great thing about this debate is, while it can be, very intellectually interesting, it can be heated at times. I think we're going to know pretty soon that, the economics work and that the, environmental impacts are quite a bit more benign than I think what a lot of people have feared. But this won't be out of sight, out of mind. It can't be. We have, financial reporting on a quarterly basis, and people will be able to tell if what we're saying is correct. And I look forward to that. So there has to be an element of, part of your brain has to be like, oh, I'm motivated by telling people I told you so. And again, maybe that's not the greatest trait, but the invigorating part about it is I believe we are right. And I think it will be evident over time, given the fact that we have to, report per SEC standards, but also given the fact that our operations are going to be under a spotlight. And, this is something that the media certainly focuses on. We'll be sharing a lot of the data, from our operations and our, environmental mitigation and monitoring plan. We're going to be spending, dozens of millions of dollars each year on that to show people that the impacts are in line with what our environmental program says. So that's the great thing about it. There will be an answer. There will be a very clear answer to this debate. And right now, a lot of it is based on speculation, but I'm looking forward to that day where we can kind of just stack up the data and, see what it says.
For people who aren't so familiar with what it means to be an SEC regulated company, can you just explain a little bit the responsibilities that come with that and why that's important?
Yeah, so the SEC wants to ensure that a company like TMC, where we're publicly listed, we have a market capitalization above $3 billion, that we are making statements that are defensible, that are resource statements where we're basically telling people, here is how big the resource is, here's the grade of the material. Those resource statements have to be signed off by what are known as QPs, qualified person. So these qualified persons, there were 9 of them that signed off, for example, in our pre-feasibility study in August of last year. 5 out of those 9 were independent qualified persons from outside of our firm. So it's important for the SEC that the statements made by a public company are real and that any of the potential risks to an operation are disclosed. So just like any other SEC regulated company, you can look in our annual filing, our 10K, and you can see a laundry list of risk factors. Sometimes actually our opposition will tout our risk factors saying, hey, TMC doesn't believe this or that. So, no, we need to make sure that all of the risks to any operation are disclosed to the public such that if they're going to buy our stock or any securities of the metals company, they have to know that they're doing it based on, fair reporting standards. Certainly if we are ever going to go out and raise money, and we have no intention to do that anytime soon in the public market, the SEC wants to make sure that a company is not trying to rip people off, that you're not making wild claims that aren't backed up by reality.
Hold on. Yeah, sorry, back up. You said you have no intention of going out and raising money on the public market anytime soon. Explain that.
Yeah, we had, in the ballpark of $120 million of cash on our latest reported filings. And that means we are not intending, in the coming months to go out and, raise securities in the public market. We feel we're in a very good cash position. And also, from a financing standpoint, you just saw today, President Trump announced a metal stockpile, something known as Project Vault, where, various, potential consumers of these metals may have access to a national stockpile. That was a positive headline, but I think it's in line with a lot of what you've seen over the last several months of, the government investing sometimes directly in metals and mining companies. So I think from TMC's perspective, we continue to have good discussions with the U.S. government, but we're in no hurry to go out and, let's say, raise securities in the public market, to raise money through issuing securities in the public market, because we feel we are in a good cash position, and we think we have some headlines in the coming months ahead that hopefully will allow the stock to keep going up and perhaps create a better entry point down the road to raise money. So this isn't a operation like on land where you necessarily have to build out new infrastructure. You have to build a new port or power plants or railroads. Usually when you're seeing a resource on land, they tend to be in far-flung locations, whether it's in a desert or in a jungle somewhere. Because if it was easy to get to, chances are people would have decided to go get the metal that was there many, dozens or hundreds of years ago, because we've been mining these metals for a long time. So usually you have to take the infrastructure with you. We don't have to do that. We can, put our vessels out at sea, and, the collection of those nodules is advantageous in that you can then ship them to really anywhere. You have your choice of where to go, and often go to places where the infrastructure already exists. The reason I bring that up is about 2/3 of the capital expenditure required for a land-based mining project is usually infrastructure build-out. So that's one element where TMC can avoid spending that kind of capital. And it puts us in a position where we can use our discretion a little more keenly when it comes to the raising of new funds. Because any stockholder doesn't like seeing companies continue to issue new securities and raise funds and potentially dilute their interest. So I bring that up just to note we have no imminent need to raise funds. We're in a good cash position. But yeah, I think the public statements that we make are held to a different standard than, let's say, some of the opponents to this industry who may not, be a SEC regulated NASDAQ listed company where, perhaps you don't have to be as precise in your criticism against it. Now, I'm not saying we're perfect. I'm not saying that, everything that I will tell you today is, 100%, and anytime you're, talking about a prediction about the future, that's why we all have risk factors that say it's, often inherently unknowable, but our statements have to be based on reality, because if not, the executives of this company go to prison. Like this is it's not a guessing game. We have to believe in what we're saying when we're signing off on our financial statements.
Right. So that you're held to a higher standard of disclosure, and you're held to a higher standard of accountability for the statements that you've made. This is one of the key aspects of being an SEC regulated company. Okay, then I want to get into these IAs and PFS. I'm from impact analysis, so every time I see IA, I think impact analysis.
Yeah, initial assessment.
Initial assessment. And the PFS that TMC released, I guess, August of last year. And I'm looking forward to kind of walking through some of this with you. But I think before we go there, can you place TMC in the ecosystem of other deep sea mining companies, just to kind of give, I think a lot of people who follow the deep sea mining space obviously have heard of the metals company. You guys are generally the big headlines maker. I think it would be interesting to know kind of what sets you apart from some of the other companies in the space, and maybe also just some history of TMC to give people some background of what the company is about.
Yeah, my pleasure. So TMC has been around since 2011. It was 2011 that the founders of the company, announced with the partnership of the island nation of Nauru, that they would be together making an application to the International Seabed Authority for an exploration contract within the Clarion-Clipperton Zone. Now, the Clarion-Clipperton Zone is this area. It's about the size of the lower 48 states. It's a very, very big area between Mexico and Hawaii, where these polymetallic nodules form in very high abundance. these nodules also form with high grades of nickel and copper because the further east you go in the Pacific, you're closer to the Rockies and the Andes. And a lot of that material over time through erosion and volcanic activity ended up in the sediment on the seafloor or dissolved in the seawater. Others in this space, there's a mix of, it's mainly private enterprise, but many of the others who are in the space are state-owned entities. There are three Chinese entities, Beijing Pioneer, COMRA, and China Minmetals, that are pursuing nodule collection, that have contracts through the International Seabed Authority. They would, I think, by their own admission, say they're several years behind TMC when it comes to the collection of these nodules. TMC is the only company that successfully lifted nodules from the seafloor to surface with an integrated system since the 1970s. So going back to the 70s, there were companies like Lockheed Martin, U.S. Steel, BP, Shell, who were in this Clarion-Clipperton zone collecting nodules at scale. It was the lack of regulatory clarity at the time that prevented them from going forward, as opposed to any other economic or technological factor. So TMC is really, at this stage, the only company that's moving, I guess, with commercial pace and urgency to begin operations. You've seen now in the last several years, and in some cases in the last several months, new startups come into the space to begin exploring for polymetallic nodules in the Clarion-Clipperton zone, in the Western Pacific, near the Cook Islands. But really, we've been around since 2011. We've spent over $700 million to date. About $250 million of that has been spent on environmental research. So we have been doing this longer, and I would say with more commercial success than anybody else attempting to begin a commercial nodule collection. We don't want to be the only ones, of course, who begin and then slam the door behind us. It's helpful to see that others are interested in this industry and starting to put up capital. I guess my point would be, we've been doing it for 15 years. We've already raised and spent a lot of money, and that's put us in a position where I think our resource is more proven and backed up by independent analysis. We know with high degree of certainty where the nodules are. We know with a high degree of certainty how large the resource is, and that's, again, per SEC standards, signed off by independent experts. We've shown that we can do this at scale along our partner Allseas to collect these nodules and then bring them to shore where we have credible processing partners to turn them into metal. So I think we've really through dogged determination and some pretty difficult years, especially the last 5 years, have gotten this to a place where it's closer to being real. That's how I would describe TMC's lead versus others. But again, Lockheed Martin, for example, has announced last year that they're interested in getting back into the sector and exploring partnerships on some of the exploration licenses that they've held since the 1980s. So I think a lot of people are now looking at this industry as very investable and worth their pursuit. But it would be fair to say that TMC is the leader when it comes to commercial readiness.
Yeah, you've got a head start not only in terms of the TRL and the tested system, but also those environmental impact baseline assessments. I understand that that's a big process that everyone is going to have to go through. And so being far along in that process is also puts you at a head start. Just say a little bit more about the competitiveness of this industry. I think it's interesting to hear that. I could imagine that being the kind of first mover in a space, you want to keep your competition out of the industry, but I can also see that given where deep sea mining is as an industry, you would welcome having more participants. And I'd like to hear about what it's like kind of between companies in terms of competition and collaboration and viewpoint.
Yeah, look, I would say right now it is much more on the collaboration side. As this industry matures, of course, there's, the competitive nature. And we at TMC want to ensure that, we will continue to be the leaders here. But any investor, for example, who is looking to establish a position in TMC stock, would prefer knowing that there are multiple investable situations in the industry, allowing them to diversify risk. So that's just, a reality of, the way people want to spread out risk for an investment. There are others really in the offshore space who have drill ships that can be converted for the purpose of collecting nodules. And that's very helpful to the industry in that you don't have to start by building a new purpose-built ship. So Allseas is our partner. Transocean also has drill ships, and they devoted one of their drill ships to collect nodules with a Belgian contractor, GSR. They're the subsidiary of the Demi company in Europe. I would say they've been taking more of a wait and see approach, as compared to TMC. They've they're hoping to do a collection test similar to what we did a few years ago, but we have a good ongoing dialogue with them. Chris Van Nine, their CEO, I think is a very impressive person, and we've enjoyed watching their progress just like they've enjoyed watching ours. So over time, the only way this industry is really going to mature into what it can be is participation between the contract holders like TMC, those who provide the ships to allow the collection of nodules, and those who have processing and refining capability, because it's no good if you just lift the rocks and have nowhere to send them. And I think what we've done, I would say probably better than other contractors, is establish flow sheets to turn the nodules into metal. We work with Canadian engineering firm Hatch on our flow sheet. We've had a lot of other work, including, Syntef, for example, has spent a lot of time looking at our flow sheet and the manganese product that we would make. We now have an investment from Korea Zinc, the largest non-ferrous smelting company in the world. We have a partnership with Pacific Metals in Japan for an initial line to process these nodules. So having all of those partnerships is good. And over time, yes, there's going to be, of course, more competition, but it's important to note, like, these are commodities, and whoever is able to produce at the lowest cost is going to survive across the commodity cycle. It's like Rio Tinto and Glencore and Vale. It's like, yeah, they're competitors with each other, but, for the most part, when they're competing in nickel or they're competing in copper, what matters is where is it coming from and what's the cost to take it out of the ground. That's ultimately what's going to drive the price of that commodity. But it's a commodity, it's not like comparing one widget to another. It's who can do it and who can do it cheaper and faster. And we do think this is at the stage where the industry needs to be based on collaboration in order for it to get off the ground.
What about, how do you see TMC's head start or I guess more TMC's being kind of alone out in front? How does that tie into the kind of slow pace of regulatory development? Do you feel like if there were more companies at your stage of development that would push the regulators, the ISA, to kind of finish the exploitation regulations? And do you think that, just the fact that it's only you guys out there kind of ready to go means that they don't have as much pressure to finalize that?
That's a very good point. I think a lot of the other contractors who hold ISA exploration contracts, again, are state-owned or closely associated with the state. So Ifremer, for example, the French contractor, they may not move with the same commercial purpose because, there's no mandate for them to do so. It's, continue to keep options open, to do the exploration work, do the environmental work, but it moves relatively slowly. And this was envisioned in the initial International Seabed Authority's setup. There was something put in place called the 2-year rule, which would give certainty to a contractor to say, and the people who wrote these rules kind of understood the way these international negotiations often go, where no contractor is going to raise funds and start spending money to do resource definition and environmental work if there's no promise of an end date, if there's no promise of a delivery of a mining code, in this case the exploitation regulations, that the International Seabed Authority has still not finished. So this was the construct that led to this 2-year rule being set up in the first place. And what the 2-year rule says is, if a contractor has done all of its environmental and resource definition work, and they feel they're in a place where they are within 2 years of applying for commercial production, that 2-year trigger tells the International Seabed Authority, whatever state the regulations are in, you now have another 2 years to get them over the finish line, or that contractor is able to begin work based on the state of the rules at the time. So you would be able to go through and apply based on the draft rules. So TMC's subsidiary, NORI, along with our sponsoring state of Nauru, notified the International Seabed Authority in 2021 that we would be less than 2 years away from being able to lodge an application to begin commercial production. So one would have thought that would have actually, triggered the ISA to get the exploitation regulations done quicker. And by the way, I say quicker. This is still, many decades following the formation of the International Seabed Authority, and they still, I would say, that most observers would probably agree, they're not that close to getting the regulations finalized. So it put TMC in a rather uncomfortable position where we did have legal remedies. We could have had them, review our application based on the draft regulations, the state that they were in. That may have led to a legal case in the Seabed Disputes Chamber in Germany. So while we would have had legal remedies, and we still have legal remedies, there was just a better path that had opened for us instead. And Trump, of course, signed an executive order almost a year ago trying to speed up the permitting for deep seabed mining. But importantly, the United States has never been a member of the International Seabed Authority. The International Seabed Authority, of course, was set up by the UN Convention of the Law of the Sea. The U.S. never ratified the Convention of the Law of the Sea. Instead, the U.S. put in place exploration regulations in 81, and then exploitation regulations, commercial recovery regulations in 1989. So the U.S. has had these laws on the books for a while. And actually, if you would interview Michael Lodge, the former head of the International Seabed Authority for a few terms, what he's been quoted publicly saying is that the regulations from the International Seabed Authority are largely built on the rules that the U.S. put in place in the 1980s and administered by NOAA.
Well, that's interesting. I noticed the similarity between those two things, and I always assumed that it was the other way around, that NOAA had kind of based its regulations on the ISA's regulations.
Yeah, it was actually the inverse of that. It was the inverse of that. And look, so one other thing too, you had mentioned, just to get back to the question that, wouldn't this spur along the International Seabed Authority? I think what you've seen really in the last couple of years is that there are some contractors that, again, are moving at relatively slow pace, as is their right. You have to do a certain amount of work and, every 5 years justify to the International Seabed Authority why you still hold your contract. So some were doing really the bare minimum just to hold on to the contract and keep that option value. But there were others who were trying to move a little faster. And I think what you've seen is that in regulation revisions, in the new drafts that have come out over the last several years, certain countries who perhaps don't want to see this industry go forward have been putting into the rules elements that would make it pretty difficult for any operator to begin unless you were a Chinese contractor. There are requirements, for example, to say you must do a full year of test mining before you can move into commercial production. So you would effectively be spending many hundreds of millions of dollars before you knew you could sell any nodules. That matters for a company that has to raise funds in a public or private market. That's perhaps not as material to a Chinese contractor that can just have a blank check from the government. China had also tried to put into the regulations elements that would prevent any non-signatory of UNCLOS, the United States, from having any ports. You couldn't use a U.S. flagship, or you couldn't send any material at any point to a non-signatory of UNCLOS. So ways to kind of keep the United States out of this industry. But also you started to see elements of the regulations that I think moved further away from what the original intention was, which was to, allow commercial operations in a responsible way. Many of the regulatory changes are put in place by some of the loudest countries against this, which, for example, are Chile. Chile, the largest copper producer in the world, has not been a fan of deep sea mining. They don't want to see a new source of competition for Chilean copper. Another one of the biggest advocates against the industry was France. In fact, President Macron in 2022 made some very positive statements on this industry, but then switched course about a year later at the same time that the French mining company Eramet had to get bailed out for their nickel supply in New Caledonia. The French government had to step into New Caledonia and provide a 63 million euro loan. And it was around that time that the French government reversed their position on deep seabed mining. So I guess in any national position, of course, a country's self-interest is going to, lead to their position on the topic. But you did start seeing into the regulations things that were creeping in that were just going to make it harder for anybody to operate. And I would say, realistically, the International Seabed Authority probably doesn't have a chance of finishing that mining code in the next couple of years. And now there are some who are saying, well, even when the mining code is finished, nobody can begin operations until the standards and guidelines, until the revenue sharing mechanism, until all of these other elements that previously had been assumed could come later Now people are saying they have to come first. So it's basically setting up a situation where there will be no commercial operation through the International Seabed Authority, certainly in this decade.
That's interesting. I had never really thought about how the regulations can be just, whether subtly or not, set up differently to kind of prioritize state-led versus commercial-owned mining. So that's an interesting bit of nuance that comes in.
It is, and I think there still, of course, be a push from Chinese operators to do their test mining, which they're still several years away from doing, but to prove that the technology works for them. And I'm sure they'll succeed in that down the road. But yeah, they don't have the same commercial realities of funding needs and therefore, the ability to stick to a particular timeline. So it creates a dynamic where, perhaps there's a perverse incentive from the Chinese perspective to delay adoption of the regulations until they are ready. So let's say it's 2031 and, Chinese contractors are then ready to go. What happens if at that point the International Seabed Authority has not agreed on the final regulations? Would China wait for them to agree, or would China just begin? It's an interesting question. I think the good thing for this industry is that, again, we keep on coming back to the point that we are SEC regulated. Believe me, it's not always that much fun to be an SEC regulated company and to be publicly listed, but it does mean that there will be a spotlight on TMC. And I think it's probably good for the industry for the first several years of operations that kind of scrutinized public company will be the one showing that the industry can begin in an environmentally responsible way. Like, there will be public reporting, there will be data shared with our adaptive management system. People will be able to see where we are. And I think people will be able to see that the environmental impacts are much, much lower perhaps than feared. But I think it's a good thing that it'll get started under, a company like TMC, as opposed to, perhaps some state-owned entities that may not have the same requirement on reporting and transparency.
So since we're on the topic of shifting regulators to the U.S., I've spoken with Coulter Lathrop. He kind of presented the legal case against. By the time we publish this interview, I'll probably have released the interview with Nathan Eastwood, who's kind of given the legal case in favor of the American path. Can you make the business case for taking the American regulatory pathway? I mean, the two things that stand out to me are, this was essentially seems to feel driven by the Trump administration. The Trump administration has got another 3 years, and then what happens? How do you feel? How do you reassure investors that this pathway is going to be there in future administrations? Let's start there.
Yeah, no, that's the great question. That's the one that, we, through our counsel, Nate Eastwood has opined on this. We also have, some counsel that was formerly from the U.S. Department of Commerce. So we looked at that legal question for about a year prior to the announcement of our application under the U.S. Code. So all of this predates the Trump election, that we were starting to contemplate this. Because again, there's no secret, the Deep Seabed Hard Minerals Resources Act, or DSHMRA, had been around since 1980. So it's all clear and was on the books. I do think it was interesting when we announced this application, the International Seabed Authority was pretty shocked by it, and they had not heard of DSHMRA. We had heard that the counsel for the ISA was kind of surprised and didn't know that it had existed. We had done a fair amount of diligence on it, and the conclusion was this is a very viable path. The regulations are robust. Again, they were the basis of the regulations for the International Seabed Authority. But that question about administration change is a very relevant one. So the starting point might be, we had been talking to the Biden administration about this resource and had a pretty welcoming reception. While they didn't come up publicly and say we should do nodule collection, I think there were many in the State Department and Defense Department particularly who knew that this was an industry that was going to happen, and therefore the U.S. wanted to get there before China did. And the view was, look, China will do this no matter what, so perhaps this is one area where the U.S. can actually push forward before China does. There was also the National Defense Authorization Act under Biden, which focused on nodules and what the U.S. could do to develop a domestic ecosystem. But the legal question is an interesting one. We don't want to be in a position where we get a permit from the Trump administration and then it can be easily revoked in a future administration. So first of all, I don't think that would happen. I think once you begin operations, no new president's going to want to come in and make us more dependent on China. This is becoming less of a left versus right issue. It is becoming more about mineral independence. But even if they did, even if somebody, a future president wanted to revoke it, if you're going through the process and going through every step and allowing for public hearings and public consultation and public review of your environmental impact statement, we are going through all of that. In fact, just last week, there was a public hearing on our exploration license applications. And, a lot of people voiced concern, a lot of people voiced support, and that's the system working as it should. So as we are getting a permit through something that was codified by US Congress in the 80s, that's not something that can then be just reversed based on a future executive order. Certainly, there are things that we would be concerned with if we were jumping over steps. Then a future judge could look at the process by which an application was granted and challenge that process. But it's not as simple just to come in and say through executive order, we're going to take somebody's permit away. We have legal rights, just like any other contractor would have rights. If you're trying to open a coal mine in Wyoming or a copper mine in Arizona, you can't just arbitrarily take a permit away. So it's important that we go through the process the right way, that the public is able to comment on it, and that's exactly how we're proceeding. So we feel very good that this is going to, survive for many decades to come. It is important, however, to, not just rely upon an executive order. Yes, Trump and the, entire U.S. administration really wants to do this. But if we were granted a permit through executive order, then it could be easily undone through executive order. So we're going through the stickier, congressionally approved process, and that's what gives us legal certainty over the long term.
That's good nuance to add. It's easy to follow American politics and think that everything is kind of, changing week by week with Trump, and that Trump drives everything that's happening. So it's relevant to remember that this is a process that predated Trump, that you were also in the process before Trump, and that not everything in U.S. politics is all Trump all the time.
It's worth noting, too, it's a good point. I mean, this has been the law of the land for, 8 different administrations, Democrat and Republican. And, if for example, there was a desire to, to walk anything back or to, challenge somebody's permit in the future, U.S. citizens or, U.S. NGOs, they can have rights. And there are some NGOs who are already making noise about this, saying, well, we'd love to think about how to legally challenge it. Everybody has a right to do that. It doesn't mean a court has the obligation to hear a case. But one thing that I think people often misunderstand about this topic is the International Seabed Authority would not have standing to come into a U.S. court and challenge the permit grant. The U.S. is not a party to the UN Convention of the Law of the Sea. TMC is not a party to the UN Convention of the Law of the Sea. There's not really an international court by which that fight could even occur. If the U.S. were a party to the UN Convention on the Law of the Sea, then there could be a seabed disputes chamber, conflict coming up between the U.S. and the International Seabed Authority, but that's not the case. So that's why for us it's very important to make sure that, we go through the process transparently and we don't skip over any steps, and that's exactly what we're doing.
Okay, I want to get to the pre-feasibility study that you released a year ago before we run out of time for this interview. So let's jump there. I guess I want you to give a background on what a pre-feasibility study is, what's the purpose of it, and then what were the headline results from the things that you published in August?
Yeah, look, a pre-feasibility study is usually a typical step, even for a land-based project, to show investors that you're ready to take the next step. It's, the first point, there's an initial assessment, and that is something where the assumptions, the underlying economic assumptions, the cost assumptions, have a wider range of flexibility in terms of how precise one must be in the estimates, plus or minus 50%. Once you get to a pre-feasibility study, generally, you're going to be trying to narrow those expectations on cost to plus or minus 25%. And then as you get to a feasibility study, that might get to plus or minus 15%. So a pre-feasibility study gives us really the ability to show investors that we are getting close to commercial readiness, that we're getting closer to our investment decision, where we and our partner Allseas, for example, would elect to start getting the vessel ready for commercial production, that we're less than 2 years away from hitting go. Let's build the second collector vehicle. Let's do everything necessary to get ourselves ready for production and to be able to tell the market, here is what our initial mining area would be worth on a tighter range of assumptions. So it's a buildup of confidence for the market and for the partners of TMC who would be investing capital into our commercial production system. It's also important because pre-feasibility study is generally where you can establish reserves. And we're the first company to ever show reserves, probable reserves for a deep sea nodule project. That means, again, per SEC standards, we are saying, all right, we have a resource of about 1.6 billion tons of nodules in our contract areas, but here's a subset of that resource that is deemed commercially viable per SEC reporting standards. So the SEC revised some of their mineral standards in the last decade to something called SK 1300. This is the equivalent of, let's say, the Canadian rule 43101. But basically, resource reporting standards that investors around the world can understand and ensure that they're putting money into a project that's at pre-feasibility stage. They have a reasonable expectation of return, and that has to be deemed economic. That's exactly what the pre-feasibility study said. It showed from our first production area, what we call NORI Area D, there would be a net present value today of about $5.5 billion. It would also show reserves on about 51 million tons of nodules. And it shows the level of economic sophistication that can give confidence for partners and public market investors to invest in the project. That's the point of it. So that's a long way of saying it's a buildup in confidence. It's showing that, hey, the rubber's about to hit the road. Make sure the numbers that we're putting out are real and based on economic reality, and that the prices for commodities that we're estimating are reasonable, the costs that we're estimating are reasonable, and that's, I think, exactly what the pre-feasibility study showed. So we are covered in terms of our stock by 8 research analysts, 6 of which put out price targets on our stock. They're all buy rated. They all publish independently, and it was important for all of them to go through our pre-feasibility study, go through the assumptions. And, perhaps if they wanted to call BS on any of it, they have every right to do so. That's what independent research is there for. And I think it was helpful just to show that, again, we're transparent. It's open kimono. We can debate about, should our copper price have been higher? Should nickel have been different? Should cobalt have been lower? And those are all relevant trade-offs. But I do think this is being, looked at and scrutinized by some pretty talented people at, mining firms, Cantor Fitzgerald's mining analyst, H.C. Wainwright's mining analyst. There are quite a few who have gone through these numbers, and I think add some credibility to the assumptions that we made in that study.
So not only are you putting a number to the actual reserves, you're also laying out in detail all of the assumptions that got you to that number. So it's not only a higher standard, a higher threshold, a somewhat regulated standard for how to make a reserve calculation, but people can also just kind of check your work and see, okay, they're making this assumption here, and this is the system that they're planning on using. These are the prices that you're expecting, et cetera, et cetera. And is that the first time that you laid out the kind of full system of everything that is in the TMC plan to get these nodules to market?
Well, it was a very important update to one that we had put out, not a pre-feasibility study, but an initial assessment about 5 years ago, a little over 5 years ago. So when we went public, it was important to show investors that, here's the resource potential. It wasn't at the same level as a pre-feasibility study in terms of the, I guess, range of outcomes. It didn't have to be as precise, but there were initial assessments put out for our contract areas at the time held by our subsidiaries through the International Seabed Authority. But costs have changed a lot since then. Metal prices have moved a bit. So I think the market was very eager to see what the picture would look like now that, cost assumptions are different. And at the time when we went public, we assumed we would be building, these mega processing facilities. And, we had to pivot to more of a capital light approach to rely more on existing processing facilities and rely more on our partnerships. That was a reality of us not having as much cash as we anticipated over the first few years of being public. So in pivoting to that capital light approach and then updating for our cost assumptions, this was really the first time where people could, underwrite their own economic models based on the TMC disclosure. So it was a long time coming, but it was certainly something quite important for people to wrap their heads around. So we feel good about it. I think, frankly, at the time that the pre-feasibility study came out, we had some metal price assumptions that looked a little more optimistic than some people would like for cobalt, for example. But the reality is now current metal prices are actually pretty close to where the pre-feasibility study and initial assessment numbers are. So we think, over time, things will, of course, continue to be volatile. But we do feel pretty good about, what those assumptions are. And as we get closer to production, as we are, zoning in on what our ultimate processing and refining plans are going to be, the market can expect more updates like that. So this isn't the last PFS that you're going to see from TMC.
Can you just walk us through the kind of bare bones of TMC's plan for people who don't know what your system is for getting the nodules up, what your plans are for getting them processed, just what was in that, and just at a really high level, who are you working with, and what is the step-by-step plan?
Absolutely. So the first plan is, by the end of 2027, beginning commercial production with our partner Allseas on the Hidden Gem vessel, one ship. And that was the same ship that was used in late 2022 to lift 3,000 tons of nodules to the surface at scale. So in that test, we and Allseas felt strongly that, all right, this is commercially viable and we can move forward to the next step, which ultimately led us to our pre-feasibility study work. But the first vessel, we would anticipate, instead of just one collector, like the system we used in the test in 2022, we would have two collector vehicles on the seafloor, both then connected via flexible umbilical cord to a riser pipe. So this is an oil and gas drill ship. But rather than have a drill ship on the surface, then 4 kilometers down to the seafloor, rather than drilling into the seafloor, you're connecting that riser pipe to these collector vehicles via a flexible cable. So it's actually, certainly much less invasive than offshore drilling. Here, you're just having a robot, effectively like a large vacuum cleaner, picking up these loose rocks in an area with less biomass per square meter than most other biomes on the planet. And these rocks are not attached to the seafloor. So unlike other types of deep sea mining where you do need drilling and blasting, you don't need any of that for nodule collection. So it's naturally a much less invasive process. So the collector goes over the top of a nodule. It shoots a hydraulic jet of water through a Coanda nozzle, and that Coanda effect, which is fluid on a curved surface, similar to the wing of an airplane, that creates negative pressure and a lift effect. So it's not really a vacuum cleaner because you wouldn't want to have a vacuum 4 kilometers deep. That would just be too pressure filled and it would collapse. But it's similar to a vacuum effect. And that nodule then rides up on compressed air to the vessel on the surface. About once a week or so, the vessel will get filled and the nodules will be offloaded to a bulk carrier, a Panamax, a Handymax, and taken to shore for processing. The pre-feasibility study assumes that in the initial years of production, that the bulk carrier will go to our Pacific Metals partner in Japan. And they have an existing rotary kiln electric arc furnace line that is available to process nodules. So the nodule would be heated in a rotary kiln, then melted in an electric arc furnace. And again, I would encourage people to go to our website to see videos of what this looked like. We actually did this with a 2,000-ton sample, showing that nodules can be turned into a nickel, copper, cobalt alloy, and then a manganese silicate product that could be sold from there. So the pre-feasibility study assumes that at some point next decade, we might build a refinery in the United States and send that intermediate material from Japan to the United States for further refining. But the plan in the initial years is to go from 1 ship to 4 ships by about 2031, ramping up in a pretty measured way as we learn more about environmental impacts, as we learn more about how to collect the resource economically. It's a measured ramp up from 1 ship that can do up to 3 million tons per year to a run rate steady state production in 2031 and beyond of 12 million tons per year.
Let me back up a second. So the 5.5 billion net present value. I also meant to kind of get you to clarify that. So that is entire life of the project, the amount of revenue that you anticipate given your assumptions, those nodules selling at market. Is that, can you, I guess, just add the details to what net present value means for the layperson such as myself?
Yeah, definitely. Well, I'll talk about it, not just the pre-feasibility study, but let's look at the total resource. So that includes the pre-feasibility study, which is our first mining area. That's 5.5 billion net present value today. On top of that, you would add in about 18 billion of expected net present value today for the other blocks beyond that initial mining area. So the combined net present value would be $23.6 billion. So let's start there. That's kind of the net present value today, the discounted cash flow analysis, if you will, for the entire area under TMC's expected contracts. That actually translates to about 370 billion of lifetime revenue and about 200 billion of lifetime EBITDA, earnings before interest, tax, depreciation, and amortization. So when you then bring it down to 23.6 billion, that is the discount at 8% discount rate of all those future cash flows brought forward to today.
Why 8%? That seems like a high discount rate.
Well, some might say it's in line with some other projects like this. Typically, you might start with a higher discount rate, and then as you get closer to production, bring it down. So we brought our discount rate from 9% in 2021 to 8% today. And the reasoning behind that is, well, now it's closer to commercial readiness. Since that time, we've proven out the resource, we've done a lot more environmental work, and we've also proven that we could lift nodules at scale. So it made sense to use a lower discount rate. But yeah, that's about industry standard right now. But you can actually look at our pre-feasibility study and initial assessment on our website at investors.metals.co, and you can see a sensitivity table and say, hey, if you put in different metal prices, how does it change that net present value? If you put in a different discount rate, those are all things that we've sensitized.
Interesting. Okay, then, yeah, staying with the kind of worksheet of the plans, you start small, one vessel, two collectors, you ramp up. You start with, was it PAMCO refining from the nodule to matte? I guess, talk me through what happens in the ramp up future years as you get more nodules, and yeah, what the plans are for processing and sale of those nodules.
Yeah. Well, look, what the PFS shows is that in addition to processing in Japan, that there may be an opportunity down the road to process at existing RKEF lines, rotary kiln electric arc furnace lines in Indonesia. Now, obviously, most of the Indonesian production is owned by Chinese entities. There's about 20% of the RKEF lines in Indonesia that are not Chinese owned. And right now, there's quite a bit of overcapacity in that industry. So there is a potential to process there. But our partner in Japan, Pacific Metals, they have 3 RKEF lines. 2 of them are open currently. And we assume that, we're using one of them, but there could be more processing capability there in Japan as well. So it'll be a combination of initial processing in Japan and Indonesia. And then by, the 2030s, really ramping up to the mid 2030s, that's when we would take that intermediate matte material coming from those RKEF lines to the United States for refining into battery metals, nickel sulfate, cobalt sulfate, etc. So that's the assumption that's signed off by our third-party experts. There is, however, an opportunity to go a bit beyond that. And what the United States is currently so focused on is how can they encourage reshoring of industrial capability? There hasn't been a new smelter built in the US in many decades. There's currently almost no primary production of nickel, cobalt, and manganese domestically. So the US, on what we would argue is, 3 of their top dozen most critical metals, the US has no real plan for it. Now, there are new mines being proposed for nickel and cobalt in northern Michigan and northern Minnesota. Those tend to be relatively small operations in the context of, what TMC could bring. What we would produce, let's say, from 1 billion tons of nodules could supply current US needs for nickel for about 100 years, 200 years of cobalt, and about 300 years of manganese. So if the United States wanted to say, hey, let's build out these processing lines and let's build out the refining capability somewhere within the United States, TMC, of course, would listen. And, we have partnerships lined up that could help us answer the bell if the U.S. wants to move on that. So we've seen the United States make investments in, companies like MP Materials, Lithium Americas. They also have, lined up a partnership with our partner, Korea Zinc, to build a very large smelting facility in Tennessee. So the U.S. is really trying to, reshore and build out some of this industrial capacity. And if they wanted to support a project like that, TMC would have the feedstock to make it happen. But it's important to note that we wouldn't have put anything like that into a pre-feasibility study or initial assessment because it's still in the phase of discussion and negotiation. It's not yet ready to say, okay, what are the financial assumptions behind it? What's the capital required? TMC, we're a $3 billion market cap company. We're not going to bite off more than we can chew and assume that we're going to start building a mega facility unless the U.S. wanted us to do it with them.
Interesting. Yeah, I think one of the things that jumps out at people who follow these things at a superficial level is the conversation about reshoring supply chains and getting mineral independence, and then to hear that, well, we're still going to be dependent on Indonesian midstream refining. Talk to me, you mentioned overcapacity in those smelters. They're already meeting that, they're already encountering overcapacity there. Why is that? Why would they be interested in the future in getting a foreign feedstock? Indonesia's got no end of reserves of laterite nickel.
That's true. And I think it's a recognition that there was perhaps an overbuild over the last 5+ years of RKEF lines. So, there are well over 200 of those lines. Our analysis is that there is some significant overcapacity already. But one of the difficulties is that the grade of the saprolite, has traditionally been feeding those RKEF lines, has been going down. There's still plenty of it, you're right. And one of the questions, I guess, environmentally was, how much of the rainforest are you okay just deleting around Indonesia to go get that material? But even on the economic question, the grade, let's say 10 years ago, if it was 2%, is closer to 1.5% today. And the Indonesian mining ministry warned the market about a year ago that the grade would be closer to 1% by the end of this decade. So as that grade goes down, the economics become a bit more challenged, and perhaps investigating an alternative feedstock that perhaps leaves their rainforest more intact, I think would be viewed as a net positive. And I think this is one of the areas of debate where, often I hear people say, well, if you begin deep sea nodule collection, you're not going to stop land-based mining. Well, of course not. Nobody's making that argument. It's a question of how much of each, and would we be willing to trade to say, look, if this is for the given amount of nickel required by the global market, if we can replace, 1 million tons coming from Indonesia's rainforest backyard, and instead get that 1 million tons coming from polymetallic nodules, is that in and of itself a worthwhile trade-off? And if it makes sense economically to do so, yeah, I would say that is a worthwhile trade-off. So it's not just a question of, this is good or that is bad and very black and white, but incremental progress to incrementally reduce dependence on what could otherwise be a higher carbon intensity, higher biodiversity source. I think that's still a net positive for the planet.
Okay, since you mentioned the word trade-off, I've got to ask you a somewhat awkward question about how do you advise people to make these sort of abstract trade-off decisions across value categories? This is related to my PhD research, and it seems like trade-offs is something that gets raised a lot in the deep sea mining conversation, in minerals and climate change conversations. And I don't feel like people have got necessarily kind of the best frameworks. I don't feel like people are generally comfortable digging into trade-offs. Just at an abstract level, how do you think about making trade-off decisions? What advice do you give to people who have to make these decisions?
Yeah, well, it's almost two different decision-making concepts that have to be held at the same time. There's the narrative, and let's say you're a brand and you're determining where to go to get your nickel, they have to consider the narrative around a particular industry in addition to the actual data. So the tough part is with trade-offs, boiling it down to a set of comparable numbers. We might say, all right, the first place to start is carbon intensity, because mining on land or anywhere is a very carbon intensive process. So we try to provide some data like that to our potential customers by doing life cycle analyses. And Benchmark did a life cycle assessment of our nickel and copper and cobalt from these nodules. They did this assessment back in 2023. And what they found is the carbon intensity of getting nickel from nodules is quite a bit lower than all known sources on land, whether it's sulfide projects in Canada or Australia, or a big reduction in carbon compared to some of the Indonesian RKEF processes. But then you have to bring in other factors. What about the use of the seafloor compared to the use of the land? We would say, look, you're going after more seafloor here. It is a larger two-dimensional footprint, but it's pretty flat and it's a pretty common area. So the abyssal zone is about half the planet. The abyssal zone is one of the most common ecosystems on the planet. And yes, we would be impacting over the course of many decades, a fairly large chunk. I think when people hear, however, how small our initial mining area is, you're talking about between TMC's contract areas and even all of the other International Seabed Authority contract areas, that's still less than half of 1% of the global seafloor. So even if everybody started mining tomorrow, which as you and I discussed wouldn't happen, and even TMC is ramping up in a measured way, you have to consider the trade-off of a larger footprint in a two-dimensional zone compared to, let's say, a more deep, impactful scar in what could be a biodiverse, rainforest on the top of a mountain in Indonesia. How do you stack those up against each other? How do you compare the relative value of bacteria living in the seabed sediment compared to large mammals and even people that might be close to a mine site? I don't have the answer to that. Like, I think all you can do is really say, look, what are the dozen or so factors that matter? And if it's tailings, if it's waste, if it's carbon, if it's impact on local communities, stack them all up. And then, that's for, I think, politicians to debate and decide, but also for brands. At some point, you're going to have some brands who say, you know what? We want nodules because it's going to reduce our carbon impact. And when we report what's in our electric vehicle battery, this will look good. And just like the nuclear industry, getting started 50 years ago, it was scary to a lot of people because it had the word nuclear. And a lot of opposition to that industry maybe was based more on feeling as opposed to raw data. So what I won't be able to say is, look, here's the data that matters and ignore everything else. I think it's just a matter of trying to stack things up using comparative factors. And then it's up to individual brands, it's up to consumers, and it's up to our elected leaders to determine, where they should sit on that value scale. I think nodules are a very good story environmentally, and I think that will certainly put us in a good part of the debate when we consider trade-offs, but that's not going to be for TMC to decide. All we can do is provide the data and let people think for themselves on it.
Yeah, so I'm hearing you highlight two things. The first being kind of get data on get together the diversity of value indicators that are relevant, put data to those, and then try to get the indicator sets that are going to be as comparable as possible. And then the other thing is that information gets put in front of decision makers, and it's going to be different sets of decision makers that get to make this decision. It's not you making the decision. It's not anyone making a single decision. It's a whole bunch of different people making a whole bunch of different decisions in different contexts also.
That's exactly right. And the easiest way to boil it down is a particular automaker, for example. They'll have, a team of sustainability professionals who are looking at these life cycle analyses from various companies, and they may have a different set of factors that they care about relative to a different brand. The tough thing with what we'd be producing, these commodities, is it's easy to then put it into a global market and then, it kind of gets washed on the other side. So how do you determine what are the relevant set of factors when, certain nickel is coming from a pretty responsible sulfide project in Ontario versus, perhaps a less responsible project that's damaging local waterways in Indonesia? Well, that's why it's so important to have traceability. And I think we're seeing the industry move towards traceability where you can tell where the metal comes from. So it's not just put into a global market and then washed on the other side, but rather being able to use digital technology to figure where things are coming from and trace it throughout the life cycle and various buyers who may own it at various points before it's then recycled and bought again. So I don't have the answer to it, but we're thinking through a lot of those questions. And our view is, look, as traceability becomes easier to do and more common industry practice, we think that's going to be very good for stacking up nodule impacts versus some of the alternative sources. But it's not going to be perfect. It's going to be messy. We're all going to, learn quite a bit as we go along. But I do think that, traceability is going to be something that's very important to buyers in the coming decades.
It'll be interesting to see how traceability manages to come into the metals market. This is something that I've been hearing people talk about as kind of like one of the most necessary components in order to get consumer preference all the way upstream to environmental impacts and social impacts, etc. You got some pushback on your pre-feasibility study from different quarters. I imagine that TMC is used to getting pushback from just about everything you guys release. I'm not going to try to articulate or I would love to be the right devil's advocate for some of these things, but I don't have the right chops to do that. But tell me, is this, just again getting back to kind of like the dynamics of being in this particular industry, is it normal to get PFS kind of scrutinized publicly this way and get that sort of pushback? Is this something that a lot of kind of companies in the mining industry are used to, or do you feel like TMC has this unique situation where you not only have to make this document, but then defend it?
Yeah, I would say the scrutiny is quite a bit higher for TMC. We definitely have a target on us as kind of the new players coming in. There are certain people within land-based mining who I think if you ask them in their heart of hearts, do they want a new competitive form of supply? Of course they would say no. I would argue that's one of the reasons, for example, that Chile is pushing back so hard against this industry, or that France, through their nickel interests, are pushing back against it. And from their end, I can see the rationality of doing that. It would be great, if they gave us a bit more of a fair shake. But when I look at other mining companies' pre-feasibility studies, I, of course, always say, oh, that's an interesting assumption, or, oh, I don't agree with that, or that assumption, or this assumption. But I think it would be rare for me to then go on LinkedIn and start trashing it publicly. I don't think that's necessarily, look, everybody's welcome to their own opinion. But I do think there's a higher level of scrutiny for us, given that we are kind of the new game in town. But that's the great thing about this. Like, we'll know who's right. And I feel we are correct. And, we stand by our numbers. If at any point we don't stand by our numbers, then you'll see TMC make an announcement and pivot, and we'll adjust our financials for it. So there is no hiding on this. But look, a lot of the folks who I think have been most vocal in, attacking certain assumptions, certainly some of them were attacking the price assumptions, and those have actually shown to be valid, but who knows? They could go in the other direction. They could go more in our favor by the time we begin production. I think it's all healthy. I'm a little surprised at how much, people seem to take it personally when we're talking about, economic assumptions that everybody's free to make. Let's have a healthy debate on it, and, we'll see what happens. But again, even some of the people who are attacking us most violently were actually shown to be then, doing paid work consulting for some of the anti-deep sea mining NGOs. So everybody's got their own, set of interests, and I don't hold that against anybody. Like, we all have to talk our own book, and of course, I'm coming from the perspective of TMC. But if somebody else has a different opinion, it's a debate that I'm willing to have, and I'll be at the PDAC mining conference next month in Toronto. The last time we were at PDAC, it was prior to the announcement of our pivot to the U.S. regulatory path. So I'm sure we'll get a lot of lively discussions, and I would welcome anybody who's listening, stop by our booth, and it would be great to just, hash it out. I think this is healthy, to be able to challenge other people's assumptions. This is what a free market should be, not just a free market for capital, but a free market for ideas.
I'm sure you will get a lot of healthy discussion at PDAC. Like I say, I'm not going to try to push you on all of the questions that I've seen people raise, but the one that sticks in my mind that I would like just to hear from you on is the idea that because nodules are so high in manganese, and you are assuming to sell that manganese at something like market rates, isn't it the case that you're going to flood the market in manganese and affect the prices that you are relying on? How does that argument stack up, and how do you see it?
Yeah, I think it's legitimate to make that argument. I think, we, in looking at our initial assessment, so the pre-feasibility study, is covering the initial mining area, but the initial assessment is everything else. So the PFS is less than a quarter of our total resource. The initial assessment is about 75%. If we are then developing that area under the initial assessment, we actually changed our manganese price assumption to be lower than it would have been in the pre-feasibility study for that initial assessment, recognizing that, yes, if we are coming online and we're producing 40 million tons per year of nodules, that will have an impact on the manganese market, and it could have an impact on prices. So we do try to account for that. But look, it's not something that we're seeking out to do, to say, hey, we are very eager to shut down some of the higher cost, higher environmental impact supply coming from Africa, but there could be an impact over time. Now, the manganese market's very interesting, though, in that manganese sulfate is increasingly viewed as a great alternative source. LMR batteries, lithium manganese rich, are basically the same price per cell as LFP, lithium iron phosphate, and have about 50% higher energy density. So you've seen GM talk about manganese being important for their future batteries, and Kurt Kelty from GM actually mentioned at a conference last year that nodules would likely be one of the largest sources of manganese in the future. We know LG Energy Solutions was looking at LMR batteries. Ford had been talking about it. So there could be new demand coming from manganese sulfate for batteries, but manganese is a bulk commodity, and it's needed for steel making, but it's not something where you could really absorb, a new 10 or 20% of the market overnight. So we do assume that as we ramp up gradually over the coming decades, the market will be able to absorb it. It's possible that higher cost supply does come offline, and that's the way a good commodity market should work. If somebody's able to get it cheaper and better, then that should shut off some of the higher cost supply, which tends to be the higher impact supply as well. So I think ultimately that would be a good thing. We do try to account for that in our assumptions, but again, our ramp up's going to be pretty measured. And I think by the time we're getting to those high production years in the 2030s and beyond, the market will know what to do with it.
It'd be great if the higher cost supply was always the higher impact supply. I hope that those assumptions tend to hold. I'm going to let you get going soon. Is there anything we haven't touched on that you would like to mention?
No, I think maybe the only thing too, and we just started talking about it, but it is really the fact that there are four metals in one nodule that does drive the economics. It's not just, oftentimes people say, well, we may not need as much cobalt, or we may not need this or that. But the fact that they're naturally occurring together is what, allows this to be sustainable. And I don't just mean sustainable like environmentally, but allow you to survive multiple commodity cycles, because you never really know where a particular commodity is going to spike or go down in price. So the fact that you have a basket of those metals means this can be a bit more predictable in terms of, the economic assumptions that we're asking our investors to underwrite. So that's really what makes these nodules very special compared to many of the other land-based resources that I've been investing in over my career. We're not going to get everything right. I think our assumptions are going to be proven wrong over and over. It's just the ability here to be closer to reality is augmented by the fact that you have four metals in one resource. And, in this sector, it's the grade that truly matters. And I think that's where these nodules stand apart.
Yeah. I've seen you mention previously nickel equivalent grade, and I meant to look up what that means and how do you calculate that?
Yeah, nickel equivalent grade or copper equivalent grade. It's a way to kind of say, out of the four metals we produce, let's just put all of that metal into the value equivalent of one of them. So nickel, for example, would be 45% of our expected revenue. A nodule might have 1.4% nickel, but then combined with all the other elements, it would be 3%. So take the manganese and copper and cobalt and come up with a what would those metals be worth relative to what nickel currently trades at, and put it into nickel equivalent. So it's basically saying, look, if this was all nickel, it would be over 3%, because in producing the 1.4% nickel, you're getting the other, call it 2.6% for free. The other 1.6% for free. That's what it's trying to do. Come up with a basis of comparison to then put it in a nickel cost curve, because it wouldn't be fair just to say, here's TMC only with its nickel costs, given that we get to offset those costs with byproduct credits from the copper and cobalt and manganese.
Yeah, I remember looking at cost curves and seeing, especially Russia coming in at the lowest end of the cost curves consistently, and only finding out kind of afterwards that that's because they co-produce platinum group metals that are essentially underwriting their entire nickel production. So I see you need to make some equivalencies in order to make things comparable. A couple of wrap-up questions. What is a important unanswered question in deep sea mining that you're looking forward to seeing research on?
I think one of the most important questions is, I guess, do you want to focus it, Eric, more on the economic answer, or more on like the environmental questions?
Just as someone who's been in this space for this long, there must be some things that you see still have a major question mark in your mind, and you think, oh, that'll be interesting once someone gets around to answering that, whether it's economic, whether it's something that a researcher can determine, or if you have to wait for the market to sort it out. I just wonder what you see as interesting upcoming knowledge.
I think one of the most interesting questions is going to be, do many of the other developed countries in the world look to what the US put in place for their own, a legislation on deep sea mining, and do they follow suit? Or, for example, does China see what the US put in place with DSHMRA and decide to remove themselves from the International Seabed Authority and go it alone? Or does this, push by the United States and other companies to get this ramped up, does it force the International Seabed Authority to get their rules in place quicker? I think it's always hard to look at a organization like that doesn't tend to move that quickly and assume that global peace is going to break out and they'll finally finish their work on time. But that interesting dynamic, I think, over the next 5 years is going to be very enlightening. I also would like to see the reaction of the maritime community here. And of course, we're converting drill ships for the purposes of nodule collection. At what point do we say, this is viable, it's moving forward, let's build some purpose-built vessels that TMC and others can contract out? Because one thing that I do, think about a lot is, how do we ensure there are sufficient vessels and a sufficient capacity for us to ramp up and hit our mine plans? There are dozens of these drill ships that can be converted, but dozens doesn't make me feel good. I'd like to have at one point, dozens of ships down the road working in this industry alone. So how do we ensure that there is sufficient vessel capacity to meet the needs of this industry? Those are some interesting things. I think the other element is on the environmental questions. I really think the data is now there. And I think the hardest part is getting the data into a form where it's easily digestible to stakeholders, to the media, to companies. Because I do feel like when people go through our environmental impact statement, they could spend thousands of pages reading it. But as you and I discussed earlier, what are the most important impacts? What are people going to focus on? Because it's really a few different vectors. It's what is the impact at the seafloor? What is the impact from this operation in and of itself? But then you also have to consider, what are the impacts relative to the other ways of getting this metal? And that's a complex question. And there are many, many different factors that people have to consider when they're looking to support this industry. And how do we make sure that it's easily digestible for people to get comfortable with it? I don't think we've answered that question yet, and I hope that we do, along with other contractors in the years to come.
I'm glad you raised that. I think it also ties back into that question of decision-making under trade-offs. It's not just getting the relevant information across the different kind of impact categories, but it's definitely a lot in how you present that information. You can have researchers finding things, and then the way they write it up, the way they disseminate, the way the media picks up on that, definitely has huge effects on how that information impacts the society. So I think it's definitely a key aspect. Yeah, where do listeners follow you, keep up with you, and where do you send people to get information on deep sea mining and the things we've been discussing today?
Yeah, well, I am pretty active on LinkedIn, so please follow me there. And then, follow TMC's account on Twitter and Facebook, Instagram, LinkedIn as well. Pretty much all of our press releases and any key milestones with our regulator, including environmental updates, will tend to be there. And all of our information, including videos on our process, are at metals.co. And our pre-feasibility study and initial assessment can be found there as well. So, yeah, if anybody wants to drop me a note, I'm always happy to chat about this industry. And yeah, look, I think it's going to be a very eventful next couple of years. So, I appreciate you and listeners who have an open mind to it. And anybody who wants to engage further, yeah, feel free to reach out. My email is craig@metals.co. So I'm not that hard to get a hold of.
Then thanks a lot, Craig, for taking the time to talk this through with me. And yeah, good luck going forward.
Yeah, it's been a pleasure talking to you, Eric. I appreciate you taking the time, and hopefully we can do another one of these down the road.